today's video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar and investor sentiment. And given that it's tax season, by the way, I do have a referral link. I do get a small kickback. Supports the channel for Free Tax USA. It's the exact same thing in terms of the settings, in terms of going through the questions like TurboTax, except it's for free federal filing. And then the state filing is $15, which is cheaper than TurboTax. So TurboTax, you pay for the software. You do get free federal filing for TurboTax, but you pay for the software, obviously. And then the state filing is $20 if you file it early for TurboTax, and then $25 if you file later on, closer to the deadline, where Free Tax USA is $15. No extra charge to you. It just supports the channel, though. Thanks so much for that. I appreciate it. Link is down in the description down below. And if you do find this video beneficial towards the end, consider dropping a like. It does help with the channel. In terms of the markets, it's not looking too great right now for the time being. I'm going to go over the economic calendar, but for the most part, we have NVIDIA earnings coming up on Wednesday. It's a $3 trillion market cap company, so that definitely will shift the markets a little bit here and there, give or take. Plus, we have GDP numbers coming out on Thursday, and we have PCE inflation numbers coming out on Friday, which the Feds regard this, for the most part, more accurate in terms of inflation numbers versus the CPI and PPI inflation numbers. But before I get to the economic calendar, I'm going to go over investor sentiment. Then I'm going to go over the technicals and then the economic calendar. So investor sentiment, for the most part, has slightly increased for the bullish sentiment. It went up to, for the week of February 19th, 2025, to 29.2%, slightly higher than previous week at 28.4%, but still lower than historical averages at 37.5%. Bearish sentiment has decreased substantially. Previous week was at 47.3%, but this week is at 40.5%, so significantly dropped, but is still higher than historical averages at 31%. Now, if you're looking at the technicals, I'm going to minimize the screen for a sec. They're all indicating further downside, which is quite impressive because it's, in a way, personally, in my opinion, by the way, I'm not a professional, so please do your own due diligence and research before buying and selling. I would assume the markets overall will still be going up, not necessarily, obviously, besides the fact that they'll continuously go up in the long run, but for the fact that I think, in my opinion, this administration will be doing a good job, hopefully, nothing's guaranteed, obviously, where the economics will start rising up in terms of the whole entire markets and all that stuff. But for the time being, for this week is going to be a heavy-hitting week, and we'll see what will carry almost basically the tides overall. Because if you look at, for example, S&P 500, looking at ETF SPY, ETF for the S&P 500, same thing, just different ratio. The one-year chart, MAC lines in the bearish movement, we did drop below the 50-day moving average of the one-year chart. And then the 5-year chart, MAC lines in the bearish movement as well. Strong bearish movement. Volumes increasing to the sell side, as well as 1-year chart, I believe, too. Yeah, volume has been increasing. Data point has not been cleared yet fully. We'll see if it's slowed down or if it's still increasing more significantly, but more on the selling side. So both of them selling side volume. Even this data point's not done too. Sorry for that mistake a little bit. The 5-year chart data's coming in. We'll see if it increased, but more on the sell side as well. And then the alt chart is arching down a little bit more so than before. So we'll see. But like I've shown in the past, we still have more room to grow for the S&P. When not NASDAQ. NASDAQ is a little bit different, but the S&P, we have an upward trend resistance line, upward trend support level, and then major crashes, 2 of them, only 2 data points so far, upward trend support level, right? But we still have more room to grow to the upper limits of the resistance we've seen back in 2013 to 2015. The market was still going up. It doesn't mean it's not going up. It's just more encapsulated underneath the upward trend resistance line for the time being. And then this was back in 2021 as well. So more room to grow, but not necessarily guarantee that we're going to go up. We've been in the mid zones and dropped down before as well. We don't necessarily have to be continuously going up, but that's the thing. So for the S&P, it's technically showing more further downside, and then we could come down to, for example, the 50-day moving average of the 5-year chart. That's a little excessive, but I'm just saying we have more room to grow to the downside, right? For the NASDAQ, looking at ETF QQQ, ETF for NASDAQ, same thing, just different ratios. Essentially same thing within the zones, upward trend resistance line, or upward trend resistance line, upward trend support level. Did break through a couple times, obviously, and then bounced off of support, etc., etc. But for the time being, we are constantly hovering within that zone. This is the line, upward trend resistance line, dating back to 2010. Either acts as resistance or acts as support, false breakouts, so on and so forth. This is where we're at, hovering with the 50-day moving average of the 1-year chart. Now, the MAC line for the NASDAQ ETF QQQ, is showing bearish movement for the time being. Volume has been more to the sell side, obviously, broke through the 50-day moving average, and right now currently underneath the upward trend resistance line as well, dating back since 2010. So given that, plus the 5-year chart, MAC line indicating further downside, and plus the volume still more on the sell side, plus the alt chart arching down just like the S&P, it looks like, unless, for example, I don't know, unless NVIDIA carries the market substantially, that is a possibility. That is definitely a possibility, especially since the sales for AI chips are quite significant, possibly could be enough to carry the markets, especially with the S&P and NASDAQ, right? Now for the Dow Jones, same thing essentially for the most part. 1-year chart, bearish movement with the MAC line, broke through the 50-day, potentially bouncing off the 100-day moving average. So Dow Jones is at 43,461 points, and the 100-day moving average is at 43,471 points, 0.31. But I guess, yeah, it already broke through it. So given that, broke through the 50-day and 100-day moving average for the 5-year chart. Again, 1-year chart. And then the 5-year chart, I believe it's MAC line, yeah, bearish movement as well, coming down potentially, maybe meeting to the 50-day moving average, but I would assume so more in this zone right about here, which is about 41,800 points, give or take, because we've seen pretty much buy zones twice right about here. Again, that's 41,800 points, give or take, around that zone. And the alt chart also arching down for the most part. So we'll see. For the time being, indications are pointing to a downside. Shaky week potentially with potential data points and NVIDIA. Hopefully it's enough to carry the markets. But overall, in a way, for the time being, you could assess it as a potential buying opportunity. I would maybe say wait a little bit longer until data points come in, and then you could assess that if it's a good buying opportunity overall in terms of what you might be looking at to buy either the market and all that stuff. Because even though they're in the bearish movement and they could be arching up, it's still potentially early in the game where more downside could be coming, because they're still all indicating downside, if that makes sense. Now, in terms of economic calendar, I apologize, a little bit late for the video. Sorry about that in terms of posting it. For Monday, which was today, there was nothing scheduled. For Tuesday at 4:20 a.m., Dallas Fed President Logan speaks in London. 9 a.m. S&P Case-Shiller Home Price Index for 20 cities for the month of December. Consumer confidence at 10 a.m. for the month of February. Previously it was 104.1. This time around they're expecting 102.4. 11 a.m. or 11:45 a.m. Fed Vice Chair for Supervision Michael Barr speaks. 1 p.m. Richmond Fed President Tom Barkin speaks. Then on Wednesday, February 26th, 10 a.m. we have new home sales. 12 p.m. we have Atlanta Fed President Raphael Bostic speaks. New home sales for the month of January, by the way, previously was 698,000. This time around, they're expecting 674,000, so decrease. But one thing also to mention for Wednesday is the earnings for NVIDIA, February 26th, again, Wednesday. Then on Thursday, we have, on February 27th, 8:30 a.m., we have initial jobless claims for February 22. Previously, it was 219. This time around, expecting 225,000, so slight increase. Durable goods orders for the month of January, previously was negative 2.2%, this time around expecting 1.9%. Then durable goods minus transportation for the month of January. GDP second reading for Q4, previously was 2.3, this time around expecting 2.3. Then at 9:15 a.m. we have Kansas City Fed President Schmid speaks. 10 a.m. we have pending home sales for the month of January, previously was negative 5.5%, this time around expecting negative 2%. 10 a.m. as well, we have Federal Reserve Vice Chair for Supervision Michael Barr speaks. 11:45 a.m. we have Fed Governor Michelle Bowman speak. And then 1:15 p.m. we have Cleveland Fed President Beth Hammack speak. 3:15 p.m. we have Philadelphia Fed President Patrick Harker speak. And then on Friday, February 28th, we have the following. At 8:30 a.m. we have personal income for the month of January. Previously it was 0.4%. This time around expecting 0.5%, so slight increase. Personal spending for the month of January, 0.7 previously. This time around expecting 0.2. PCE index, so PCE inflation numbers for the month of January. Previously 0.3%. This time around expecting 0.3. Then PCE year over year. Previously 2.6. This time around expecting 2.4. So they're expecting a slight decrease for inflation. Interesting enough. And then core PCE index, which is what they're most likely looking at because it has energy removed, which is quite volatile in a way. It's removed due to the volatility. But for the month of January, previously it was 0.2. This time around, they're expecting 0.3 which is a slight increase. So that is month over month. And then core PCE year over year, it was previously 2.8. This time around, expecting 2.6, so slight decrease. I will say though, from their conferences that they've talked about, like from after the meeting minutes and all stuff, they tend to seem to be looking at month over month. Personally, I would expect them to look at year over year, and I'm sure they do from time. They assess all the data points, so they obviously do. But from, I think it was like probably 3 conferences ago, they almost emphasize that they look at more month over month. I am not sure why personally, 100%, but they look at that data point more than year over year. At least that's what it seemed like from what I interpreted from what they stated from Jerome Powell. But continuation of 8:30 a.m. we have advanced U.S. trade balances and goods for the month of January, advanced retail inventories, advanced wholesale inventories for the month of January as well. Then at 8:30 a.m. as well is Richmond Fed President Tom Barkin speaks. Then 9:45 a.m. we have Chicago Business Barometer PMI for the month of February. Previously it was 39.5. This time around is 41.1. And at 10:15 p.m. we have Chicago Fed President Austan Goolsbee speaks. And that's basically it for this economic calendar week. Hopefully the week is not too bad, but anything's possible. Again, indications pointing to the downside. Data points are pretty important. Inflation doesn't seem to be too bad based off of expectations, but we'll see. And then GDP numbers and plus NVIDIA earnings coming out. But that's basically it for today's video. Thanks again for watching. I do appreciate it. If you guys did find it beneficial, consider dropping a like. It does help out the channel. Thank you so much for that. Thanks again for watching. Take care. God bless and peace.